What up? What up? What is going on, everybody? Phil Swanson back again with another episode of the Go Lead Everything podcast. You can find us at goleadeverything.com. If you want to grab some gear, go to goleadeverything.com/gear. Speaking of gear, this is not GLE gear. This is actually a shirt I got for working at the Detroit Marathon. What year was that? 13.1. 08? 08? Come on. It's this shirt. Seriously, from 08? You know what I realized? Y'all may do this too. I hope I'm not the only one. My wife was telling me I need to update my wardrobe. And I put in some new pieces lately. Some people think I'm pretty well dressed. But every once in a while, I'll pull out a shirt. I'm like, dang, this shirt's like 20 years old almost. I don't know why I still have it, but I still like this shirt. It's nice. I did not run in the marathon, though. Correction. Worked the marathon. Handed out water. Today's show, folks, before we get into it, I got some more really good financial thoughts for you, opinions from a guy. I'm not a financial advisor. I don't sell insurance products. I don't do any of that. I'm just sharing knowledge that I've learned over my time, and I want to share it with you because I think it'll really help you if you wrap your head around some of these concepts. Before we jump in, goleadeverything.com/gear, goleadeverything.com/gear. You can grab some gear and support the show, support the mission. Make sure you head on over to YouTube and subscribe to the Phil Swanson channel. You'll see me with the black suit on there. Go give us a little subscribe. And now let's jump in. Oh, we're also on all the audio platforms. I like audio platforms. I use Spotify myself. We're also on Apple Podcasts, Stitcher, Google Play, iHeartRadio, Podcasts, all the platforms. Amazon Music. You can find us. So go subscribe to the show, please, and leave a rating and review. Now let's jump into life insurance. You know, most people think of life insurance like just that. Insurance. What if I die? What's going to happen if I die? And there's way more uses to life insurance than that. That's one. What we call life insurance. Okay? So there's many different kinds. And there's all sorts of people that have different opinions. Blah, 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 blah. I'm just going to share one opinion today. It's a really good book. If y'all want to really deep dive into this, it's called Confessions of a CPA, The Truth About Life Insurance. I don't have it handy for my stuff here at the library, but I'll share it with you. Well, there's a couple things from it with you today, but it's really, today's all about concepts. It's all about understanding why you would do something that many people like to do so it's dumb. So we're going to jump into that today. Let me pull up the whiteboard. Not the whiteboard again. Let's do it. So, what are the different kinds of life insurance? Well, most people, when they think of life insurance, they typically think of it as a period of time. So, typically, why would you use really just paid no. Why this mic is giving me trouble? Gosh darn it! How's that? Is that better? Hopefully the sound's not all jacked up. We had an issue in one of the previous episodes that I didn't realize till after I'd recorded. So apologies for that if you were listening to that. It's pretty unusual. But yeah, like God forbid something happens to me, my wife. That way, I'm not really worried about my wife because I can work. I'll be okay. But um, mainly if something were to happen to me, my wife and my kids are going to be okay, right? Financially, at least for a chunk of time. And term insurance is cheap. So this is the Ramsey, the Dave Ramsey. This is what he would say to Diet. Go buy some cheap term insurance. It's cheap. You can get $1 million policy for, I don't know, $100 a month, maybe 150, somewhere in there. Again, I'm not a financial advisor, so, but I would say, for most people to cover their insurance need, term is perfect, right? And I'm talking about an insurance need. Now, we're talking about different kinds of insurance that I think are for other purposes than insurance. We're going to talk about that in a second. But term policies are cheap, low cost ways to cover you for a large portion of your younger years and protect your family long term. Just God forbid if something were to happen to you, right? So that's all good. That's all cool. Let me just erase this whole thing real quick. So that's term. Now let's talk about there's a variety of other types of policies, but there's what we call whole life. This is what Dave Ramsey says: no dice. Don't do the whole life. You're paying way too much for insurance for that. What is whole life? You also hear it called permanent insurance. What is whole life? Well, this is a policy where it's going to cost you a lot more, but it has cash value. What does that mean? There's actually value in the policy where you're not just paying for insurance, you're actually storing money that comes with a guaranteed. Can I even spell guarantee? Rate of return. Ooh, what's that? The guaranteed rate of return? Is there such a thing these days? Well, some of these life insurance policies have some pretty decent guarantees. Now, they're not, this isn't the magic key to short term wealth, right? Oh, guaranteed money. But the big value is that cash value, right? Whole life, permanent insurance. I'm going to get rid of this too. So I have, so why would I do whole life? Why whole life? Well, one, there's guarantees, like we were just talking about. You're not doing it for insurance, though, in my opinion. I think of whole life like a savings account. So most people put their money in CDs, other stuff like that. For me, a whole life policy is a way to very disciplined create savings in your life and get guaranteed return. You'll hear Berkshire Hathaway guy. Come on. So this is for savings, in my opinion, not insurance. And I'll talk about why that is. Um, Gosh, what's the Berkshire Hathaway guy's name? Why is his name escaping me? Y'all know who I'm talking about. Famous investor guy, lives in Nebraska. He talks about how you invest in things that don't lose money, right? So if you lose 50%, then you have to make 100% to get it back, to get back to where you were, right? So you lose 50%, then you got to double it to get back to ground zero, right? So not losing is really important. So let's talk about life insurance and whole life and how that would help you not lose. So we'll compare it to everybody's favorite, the 401k. So if I put money in a bucket, it's my storage account. So we'll just say this is a 401k. And then I've got my whole life. You with me? We're dumping money in here. We're dumping money in here. Just as a comparison. Say you're doing either or. Either or. Now, this fills up with money. Say I get it half full. If I'm going to take out a loan against my 401k, then I'm going to pull the money out as a loan, and this amount is going to go down. Now it's here. So now whatever percent return I'm getting is only on this smaller amount of money. I don't get a return on this whole thing anymore. Right? And then I go use this money over here, and then I have to pay it back. So this is pre-tax, this is post-tax, right? But this is like a key thing, right? Your money right there isn't working for you, right? While you take out a loan, you're not earning a return on that money anymore. Does that make sense? Are you following me? So the value's here. You take a loan out to now it's here. Now you're only making money on this. Plus, there's no guarantees associated with any of that. Right? As far as rate of return, you could go negative. You could lose money. People do it all the time. You're actually, I think Tony Robbins, when he talks about finances, talks about how if you don't have money in the market on just a few or 7 of the big market days, over the course of like a long 10-year, 20-year period, like it significantly impacts your returns. So, with a 401k, one, you can lose, no guarantees. Two, when you collateralize, you can't collateralize. You take out loans, and that money no longer is earning interest. So let's go to a whole life. You put the money in here. Now I got this money in here. I take some money out for a loan, but wait, the money doesn't actually come out. The money all stays in here. And the insurance company, oh my gosh, why did I write a G instead of a C? The insurance company, they actually just give me money because they know I'm good for it. They know, like, hey, look, he's good for it, so we'll give up to, I don't know, 80%, something like that. So you can loan out 80%. Oh, another thing about the 401k. This is a structured loan. Which means monthly payments. Actually, every paycheck. Payments, right? That's a big deal. Structured. That's a big deal. Now, if I'm going to compare this over here, I am unstructured. So I don't ever have to pay that back if I don't want. So, for example, on this money, I'm getting a guaranteed like 5% interest or 4% interest or something like that, right? Pretty good savings account there. But again, it's guaranteed. It could actually make more than that. It can make up to 10%, right? But I'm guaranteed 5. So I'm never losing. So never losing, right? And I can collateralize at any time to use the cash value without interrupting the growth. That's pretty cool, right? Then it's also unstructured. So whenever I do collateralize it, I don't have to make payments back. I can pay it back whenever I darn well please. And if I never pay it back, so right now you're making 5% to 10% guaranteed on that. And that's compound interest. Versus the loan is simple interest. So that simple interest is never going to grow faster than your compound guaranteed interest. So like my simple interest loan is like at 5%, right? Which is better than you're going to get at any bank right now. So, pull this back up. Make sure I'm still sharing what I think I'm sharing. All right, let's erase this. So let's just kind of go back. So 401k is a structured loan. Your money's not making money while you take a loan out. You can lose. There's no guarantees. And it's all pre-tax. So whenever that gains, whenever later you have to take money out, you're going to pay tax on all of it. Is another thing, 401k. Tax on all the gains, right? Now with whole life, this is one of the like unthought about things about whole life. Another thing about 401k, right? When you die, all your assets and stuff get stuck in like probate and where's your will and who's going to pay out what and how much death tax do you owe and on and on and on. You've heard about these horror stories. I'm going to reshare my screen because I don't think it's working right. Let me try this again. All right. So with 401k, you're not protected when you die. They're going to take a huge chunk in tax. You're going to pay tax on all that payout. With whole life, you're paying with after-tax money. And then when you die, you ready for this? Obviously, the loans along the way aren't taxed because loans are never taxed. But when you die, this goes tax-free to the next generation. Did you hear that? All those gains, uninterrupted, guaranteed gains, go tax-free to the next generation and can't get touched by probate. That's a big deal, y'all. This is how people get multi-generational wealth, by avoiding tax. I've had some deaths in the family recently, fairly recently, last several years. And I just hear the stories, right? Like these people were actually frugal. They did a great job. This isn't a negative on them at all. I'm very just astonished, right? That there's been really, really wise, faithful stewardship in my family, that, that kind of mindset was passed on to me, of at least a little bit of making sure that you're set up to, when you get sick and later in life, you have things that will cover your expenses. And although I've got a very generous family that's helped out some of our elderly in our family, for the most part, much of their expenses were covered by things that they had set up earlier in life, which is pretty darn cool. But when they died, large chunks of their money, whatever was left, if there was any, was sliced in half, like literally, because of taxes. So they tax you all while you're alive, and they tax you once again when you die. I mean, it's absolutely the most criminal, crazy thing. But I mean, this to me alone is worth the benefit of properly structured. Now, I'm gonna emphasize this. If you don't know about this, don't go get a whole life policy. Like, you will just, please don't. Please trust me, don't. I'm not a financial advisor. This is my opinion. You do what you want. My opinion is, learn about this. Find somebody. If you need, I have no people. If you're interested in learning, I'm happy to introduce them to you. Again, I don't sell insurance. I don't, these people aren't paying me, right? Like, this is just Phil trying to help you. Okay. I probably should sell insurance. It's funny. It's easy to sell things that you use and actually believe in, and you do it on your own. Like, how many times have you gone to see a movie that you really liked, and you just go promote it to a bunch of people, and they end up going to see the movie? Well, guess what? You just sold them on the movie. And people are so weird about selling, and the only reason is because they're selling things they don't believe in ways they don't believe in. So they think it's dishonest, and it hurts their conscience. And guess what, y'all? It is dishonest, because it's not really helping people. But they think it is, so you justify it in your mind, and you really got to get real on this. But anyway, you hear me here, you're like, man, Phil sounds like he's selling insurance. Yeah, because I use it. I believe in it. Like, I'm not actually selling it. I don't get money off of telling you this, but I want to help you. So the biggest benefit, I think, is the uninterrupted growth, leverage the whole time. So when I say leverage, that means I can take loans out and go do other investments the whole time. I can go use this savings to buy a rental property and never have to pay that loan back. If I do, cool. That's even better. That way it won't eat up my cash value when I die. And then I get uninterrupted growth. I get leverage the whole time. No losing. It's got those guarantees. And then the tax benefits, y'all, are just like astonishing. Like, there's no tax. It doesn't get stuck in probate. Like, those are huge. So, for example, if instead of going and putting my money in a 401k, or going and putting my money in a traditional IRA, or going and putting my money in a rental property, or going and putting my money in Bitcoin, or going and doing anything like that. Like I'm not saying not to do those. Those might be great. One of the things you'd want to do though, or think about doing, and you want to start this as early in your life as possible. And it's not easy because it's going to force you to save money, which is hard. And I wouldn't like, unless you've got at least 500 a month or something. And y'all might think that's crazy, right? Like, Phil, you crazy. How am I coming up with 500 a month to do this? It's a commitment, right? And you're not throwing the money away. Think about it. You're not paying somebody. This isn't a bill. It's like putting it in a savings account. That's what you're doing. You're saving it. You're not losing it. You're saving it, and you're actually putting it in one of the most effective savings vehicles there is. I would argue the most, because of the tax benefit on top of everything else, right? So you're forcing yourself to save money. So let's just say somehow you can come up with $1,000 a month to save. That's 12 grand a year. I know that's huge, y'all. It's a lot of money, right? But let's just say you can come up with 1K a month, right? So you put the money in. 12K a year. So you dump 12K in, then you can immediately take out probably, I don't know, 6K, something like that. Probably a little more, 7K maybe. Can't take all of it. But by like year 5, after you got 12, 12, 12, 12, 12, that's year 5. You've got 60K, and you can take out all of it, not just 60, 80, 70% of it. You can take out 100% of it. And then beyond that, it's going to just compound, keep growing as you keep saving the money. But you can still access it along the way, right? Some percentage of it, call it 60 to 80% of the cash value, right? So this is so powerful, y'all. It's a commitment to you and your long-term family. And it's just huge. Like, my family's used this recently. It's just been a huge blessing on our lives that we started years ago. And it's tough in those early years because you're not seeing that benefit. You're like, oh, this could be in my 401k making 15%, or, oh, this could be in Bitcoin, blah, blah, blah. But here's the magic I was telling you about, right? What do you do in order of operations? If you put it in Bitcoin first, right? Then whatever you earn, you pay capital gains. Right? And yeah, you might make a bunch of money. Cool. Maybe you should do that. But what I would argue, here's my point. Put it into a savings vehicle first, maybe whole life, maybe some other form of life. There's other ones, IUL, there's UL. I personally like permanent. I like guarantees. These don't have the guarantees that the others have. Now, people that sell insurance will try to convince you that they do, but they don't. All right? Whole life. Permanent insurance, lame. It's boring. Again, properly structured. You got to talk to somebody who knows how to do these. Talk to me. If you have one, send it to me, and I'll tell you if it sucks or not. Okay? But here's the deal. You put it here first, then you can loan out and go invest in this stuff. And this is uninterrupted growth. This is no tax. This is unstructured loan. This is guarantees. This is risk, and none of this. And if you just go here first, you can do both. It's compound interest on compound interest, right? Compound interest is a magic thing. So that's all I got for y'all today. I know this was maybe not the most properly structured presentation, but I just think if this has triggered or brought to light any ideas that you hadn't considered before, it's worth looking into. Again, the best book I've found, there's books called Becoming Your Own Banker by Nelson Nash. There's all sorts of books out there. But what I would say is the best book I've found is Confessions of a CPA: The Truth About Life Insurance. So go check that out. And I'm passionate about this because I heard about it years ago. I didn't get started early because I had doubts. I didn't believe it. I didn't really dig in and understand it, you know. And once I did, and once it clicked for me, to me, it's like the most no-brainer thing to set up your family for future generations. And again, the part that people miss, guarantees are cool. 5% interest, not that cool, but it's guaranteed. You never lose. So maybe it is pretty cool. Then low interest, unstructured loans, that's cool, right? While you get uninterrupted growth, that's amazing. You can't get that. I don't know where you can get that pretty much anywhere. And then when you die, you get the payout to the next generations, avoiding probate, tax free. Like tremendous, right? Like you're talking about your future family missing out on, if you don't do this, your future family is going to miss out. Like you've done all this work to create this wealth for your future generations. And if you don't do it this way, maybe there's other ways to do it that I don't know yet. If you know those, teach me, because I'm still learning. If you don't do it like this, then all that hard work you did, your future generations are going to miss out on half of it or more because of taxes. And it's going to get stuck in probate. It's going to be a big pain in the booty, right? So sharing this with you because I love y'all. Hope you got something out of it. Again, I'm not a financial advisor. Disclaimer. I don't sell stuff, any insurance products, any of that stuff. I just use it. And I hope y'all look into it. Decide for yourself, right? If you don't believe in it, don't do it. But do the research to where you understand it. And I think you'll see some of the value that I see too. Share the show. GoLeadEverything.com/gear. Grab some gear. Subscribe. Phil Swanson channel on YouTube, Apple, Spotify, Google Play, Stitcher, all the audio platforms. And share the show as you go. Lead everything.